Both the euro and the pound sterling slid below psychological levels amid US dollar pressure without any rebounds or pauses. That's why the US dollar became even more overbought. Traders are likely to search for at least a minor reason for a correction. The greenback is gaining in value thanks to the hawkish rhetoric of the Fed's officials. Yesterday, Fed Governor Michelle Bowman expressed her readiness to support a further hike in interest rates at the next meeting. Cleveland Fed leader Loretta Mester also dropped a hint about such a possibility. It's obvious that the US dollar and the US bond yields are rising against such a backdrop. Notably, the US currency is capping growth in other currencies and commodities. It's quite possible that such a reason for the US dollar correction will be found in the report on the US job openings. The number of vacancies should decline, which clearly reflects the labor market situation. However, given not very positive predictions on the US Labor Department report, which will be issued on a Friday, the expected decline in job openings will be considered a negative factor. In other words, it could be a signal of weak employment figures. On the trading chart, we see that the euro-dollar pair continues moving towards parity. The pair broke the support level of 1.0500 thanks to an inertial movement of a speculative nature. If the price settles below 1.05, the euro may decline even deeper. Notably, the single currency has already lost 7% since the beginning of the downward movement. And at this light, the sell orders could become less attractive, thus causing a technical rebound or a full-scale correction. Traders' reaction to job openings figures will determine the trend. The pound's correctional movement finished as fast as it started. As a result, the volume of short positions resumed rising, thus allowing the asset to reach a new local low of the downward cycle. The pound sterling has already lost 200 pips because of the inertial downward movement. Since the British pound is oversold, the volume of short positions may drop, thus causing a technical rebound. Traders may consider the psychological level of 1.20 to be potential support. And that's all for now. We keep monitoring the financial market situation. Subscribe to our channel and see you in several hours. We will take a close look at the US trading session.